Oh, let's hear this guy here. What he's having to say.
Still stuck at 3.5%. And so to take that one data point and say that this is a trend, I think has been a mistake that we've been making over and over again for the last 4 months. And so when you look at what consensus is forecasting, and when you look at the rate where we are right now, and don't forget, Scott, I'm still at 6%, so I still believe that the Fed has action to take that is currently not discounted into the market.
I mean, prior to today, the former Fed vice chair said the Fed may well be done.
Wow.
She did, he did, and there are other representatives who said that there is at least one more. And so we'll see. We'll see. You know, they've given us head fakes before. They last year sent us on a pivot party that didn't happen.
Interesting.
And so when I look out at 2024, and I look out at the estimates for 2024, I wonder how consensus can have both of these things. I wonder how we can forecast rate cuts and 12.2% earnings.
Wow, so this gentleman is still talking about he's expecting 6% rates. Crude falls to 1 month low. Saudi Arabia and Russia stick to cuts. Well, if they're sticking to cuts, why are we down huge oil today? Oh, Biden cancels $9 billion in student debt for 125,000 borrowers. Interesting. GM secures new $6 billion credit line as UAW strike reaches $200 million cost. Wow. I want to see more of what's going on here with oil. I'm surprised they don't have it on their front page here unless I missed it. Man, they might talk a little bit about it here. Those stocks drop, but also Cal-Maine Foods slipped 6.6% after egg producer provided a weak earnings report, citing a dynamic environment. Eggs, man, that was the talk of, what was it, last year into early this year? Egg prices going absolutely insane. Oh, man. Intel chipmaker rose slightly after Intel said its programmable chip unit will be a standalone business with an initial public offering planned within next 2 to 3 years. That's intriguing. Wow. Dexcom, diabetes names Dexcom, insulin fell 5 to 3% respectively. Energy stocks fell as a group during midday trading Wednesday as oil prices slid more than $3 a barrel. Marathon Petroleum, blah, blah, blah. Okay. But I'm still trying to figure out why oil would be down that much if Saudi Arabia is cutting. And Russia's still cutting. Like, why would you be down that much? If they said they're going to produce a bunch more, I could understand. Oh, yeah, you got to do something here. We'll have to figure that out in a moment. I'll look more into that.
Down a lot. Housing inflation has come down. It's that non-housing services area that's been, more sticky than I think, the Fed and others would like.
Right.
But if the economy is going to slow to a degree that the Fed wants it to, if you have a slowdown in job growth, city data today suggests that the consumer credit card usage is continuing to slow. So if you get the kind of slowdown that the Fed wants to achieve, you could continue to get a pull down in inflation as well without crashing everything.
You could. The risk is that we're interpreting any disinflation as the needed disinflation, and those are not the same thing. We of course we're going to experience some disinflation with 500 basis points of interest rate hikes, but the problem is that it's the services inflation, not the goods inflation. And we can applaud the goods inflation all day, but those 89,000 jobs that were added to the economy, those were all in services.
I heard some sort of noise. I'm brand new to Twitch, so I don't know what that was or what that is. But I appreciate it if anybody did anything, because I'm brand new to Twitch. Like, I never even used this before, so this is like brand new to me.
And that goes both ways. Perhaps the number is actually higher.
What makes you wrong? Where do you get it wrong?
I get it wrong if there is something fundamentally in the economy that does get us to 8% earnings growth. Now, the reason I think that we can't get there is that the cost of capital is significantly higher than earlier in the year or last year. The base effect is going to be more unfavorable. That's an inflation number. Wage pressures are slated to continue, at least in the services.
Wow, man, freaking Walgreens can't get a break. It's insane. It's down again. And what else was down? Was that Caterpillar? Well, I'll pull it up here in a moment anyways, because I'm going to look at all those Dow stocks and whatnot. Damn.
Now up at 3.5%. The new credit cards, which are the consumers most at risk, that delinquency rate is above pre-pandemic levels at 7.3%. So I don't see where this environment is telling us that we can get an 8% earnings growth rate.
So the rebuttal that you'll get, because I've gotten the same rebuttal, that you'll get to the 8% earnings growth rate because capital is harder to get, it's too expensive, is that if it's driven by companies that can internally finance their growth, then they don't need to borrow money. They're not constrained by...
That's true, and those same companies that are cash flowed can get incredible returns on their investments in treasuries right now, right? By the way, I don't know, CNBC must have been thinking it was going to be a negative day in the market or something, because it seems like they got a lot of bearish people on there today. So I'm very interested in oil here. I'm sure if I click on something... PayPal, V-shaped recovery is our highest conviction call. Hold on. Oil's going to have to wait here for a moment. PayPal stock has underperformed the broader market this year, likely due to its exposure to mixed e-commerce and consumer discretionary spending trends. Stiffening competition represents another factor holding back investor confidence in the stock. With several catalysts are on the horizon, including externalizing a portion of buy now, pay later receivables for cash, share buybacks, and new management, which could restore some of the much needed credibility. Interesting. Yeah, I agree with that. I don't know if I want to read through this whole article. I'm just going to kind of skim through it here, given some backdrop here. Competition and consumer spending weakness remain too close for comfort, they're talking about here. Yeah. Admittedly, PayPal's performance has been under a rising threat of competition in recent quarters. Instead of the payment processing... Instead of the payment processing in online checkout pure plays, many of PayPal's most prominent... I heard that noise again. I don't know what that means, but I appreciate it. If it is anything good, like I'm new to Twitch, man. I don't know this stuff. Instead of payment processing on online checkout pure plays, many of PayPal's most prominent rivals are typically latched to a bigger ecosystem favored by everyday merchants and consumers. They include obviously Shopify, Shop Pay, Google Pay, Apple Pay. All right. Specifically, Apple Pay has emerged as a leading global digital wallet in recent years, with almost 90% share of in-store digital wallet payments in the U.S. Although Apple Pay's performance in the online payments market remains inferior to its share in in-store taps, the pervasive use of digital wallet underscores its prospects to further corroding PayPal's current leadership over the long term. Okay. Extra savings run out for most U.S. households. It's always a worry. PayPal's market share remains strong. That is true. And their earnings remain very, very strong. You look at their last earnings. Share buybacks could unlock incremental upside. Yeah, the company has a whole lot of money to be buying shares back with. New management improves visibility of PayPal's long-term roadmap. Yeah, that should be helpful. Fundamentals and valuation considerations. Obviously, the stock trades dirt cheap. I think we all know that. This is in line with PayPal's implied valuation with a relative basis, payment processing networks, technology peers. Considering PayPal's market leadership in facilitating online checkout and payments alongside ongoing efforts in retaining and acquiring engagement, which supports continued cash flow growth, we believe the stock warrants a valuation multiple closer to the peer group average. Okay. Here they have an estimated price $89, $86, $86, and $77 for an average of $85. This is not very bullish. Crude. Are they talking about crude? Hold your horses.
Consumer spending falls off a cliff like that is if the labor market falls off a cliff, right? Because people are going to keep spending as long as they feel employed or feel optimistic about getting a new job.
And really the only way the labor market falls off a cliff is if consumer spending falls off a cliff. So that's like what came first, the chicken or the egg, right?
These guys have, kind of the trend, the recent trend on their side of a market certainly under the surface that's troubling. Bespoke today, the SPY has made lower lows on 33 of the last 50 trading days. That's tied for the most in the ETF system.
Not great.
So, we got to get off the mega cap bus for a minute and really look.
Hey, I'm so new to Twitch, I can't even see how many people are watching this or not watching this. So if you're watching this right now, leave me a comment, please. Say hello, because I don't know. And I don't even know if the chat thing works. I have no clue. So like I said, I'm brand new to this Twitch stuff. So if you're watching this, say hello to me so at least I know somebody's watching out there, because I don't really know.
If you guys want to be, the royal you guys, want to say, hey, the Fed's raised rates by 500 and something basis points, that's going to have an effect on the economy, that's going to have an effect on the market. Don't look at the S&P 500, look at the equal weight index, because I, money manager at firm A, B, and C, need to pick stocks and outperform. That index is basically down on the year. Let's just call it flat. Yes, the index is up. We know this. This is not unknown to viewers. It's not unknown to the panel, NVIDIA, Apple, et cetera, et cetera. The average stock is down. And so you can say with some gusto, some emphasis, the Federal Reserve has raised rates by 550 basis points. They might have to do one or two more, and stocks have reacted.
Can you also say that they're...
Awesome. Thank you, people in the chat. I appreciate you guys saying hello. I want to make sure all this tech's working. Like I said, I'm brand new to this stuff. I'm still like concerned, like, is everything working properly and whatnot? So I appreciate you.
Under the surface, to your point, is it really?
The equal weights trading, it calls 15, including the 7. The equal weights, it's called 15 times forward earnings. And that said, I want to rebut something they said earlier very quickly. Greg made the appropriate point, which is the reason why you go back and try to explain why one was wrong was so that you don't make the same mistake again. What he left out there is, with respect to the consumer, the revisions to GDP, et cetera, that just happened showed us that consumers had even more savings than we originally anticipated. So there is even more ammunition. Forget the $9 billion, which, as you well know, is a drop in the bucket. Consumers had multiple hundreds of billions of dollars of extra savings than we originally thought. They are.
So that's a really bullish thing. If you're thinking, if you want to be bullish on this market for this next, we can call it 12 to 18 months. There's some ways you could be bullish, right? And I think the bear case has been talked about to exhaustion this past year, right? If not the last year and a half, 2 years, to be honest, really since the Fed started raising rates. If you want something to be really optimistic about for the market, for the economy, all those sorts of things for the next at least year and a half, consumer confidence has been in a horrible place for the last pretty much 2 years. It's been at extraordinary lows. And the reason being is, inflation. It's sliced and diced, folks, right? It hasn't been fun to, have to pay so much more for everything, you go to buy at the store. So it feels like even if you're making more money, you're kind of, for some folks are like, am I making more than what's being offset by gas prices or the grocery store or restaurants or whatever, right? So there's a potential here that inflation continues to cool in a massive way. And there's a potential that inflation is not even an issue in 2024. I mean, non-existent. And remember, inflation never was an issue until really the past 2 years. So you got to keep in mind, like, inflation's a problem every once in a while, but usually it's not a problem for a very long period of time, other than the 1970s was a whole different situation, right? So there is a realistic potential that consumer confidence could get in a much better place over this next year, which would certainly be good for consumer spending and for individuals in general. If all of a sudden you're starting to, let's say you got some nice wage gains over the last couple of years, but now you're not having to deal with the inflation part of it, then it actually feels like you got a nice raise from your job or you're making more money or those sorts of things, which is very, very helpful. And so that's a realistic potential we could have, folks, in next year. So that's just something to kind of, keep in mind there. And the small business confidence index has been in a bad place for nearly 2 years as well. If there goes another one of those dang prime trucks, man, they're always driving around here. This one's driving slow, though. The business confidence index has been in a bad place for pretty much 2 years. If we can see the business confidence, and I'm talking about the small business confidence index, getting a strength in place, then we're really talking here, okay? So, all right, let's go back to hear what these folks are chatting about here.
Speaking of, NASDAQ high of the day, up 1.25%.
They knew I was going to say it.
Well, as rates have taken a breather, and I don't know, things are unsettled. You downgrade Apple, and Apple goes up, and the NASDAQ does too. Go figure. Guys, thanks. I appreciate it very much. Greg Branch, Liz Young, Dan Greenhouse, right here at Post 9. Let's get to our question of the day. Would you buy Apple? Speaking of, on today's downgrade, you can head to @CNBC Closing Bell on X to vote. The results are a little later on in the hour.
I'm going to definitely surf around for that downgrade here in just a bit on Seeking Alpha.
Evelos joining us with that. Christina.
Well, let's start with travel stocks. They're getting some relief today as oil prices pull back. The cruise lines are all in the green. You can see on your screen, with the exception of...
Yeah, but that's not even getting close to getting back to where we were at just yesterday.
Sharp drop yesterday, and many of the major airlines have warned of higher fuel prices just in the last few weeks or so, and that's part of the reason they're all off about 10% or more just in the last month. But today we're seeing green across the board, with the winner American Airlines up over 3%. Cal-Maine is lower, though, after the egg producer reported a 30% drop in revenue compared with last year. That comes alongside a 30% decline in egg prices, which the company says have now normalized from last year's record. Remember when we were talking about that? Egg prices soaring.
Yeah.
Cal-Maine stock down 6.5.
All right, we'll see you in a little bit. Christina, thank you. Christina Partsenevelos. We are just getting started right here on Closing Bell. Up next, green shoots for big tech. One of the hardest hit sectors over the past month is getting a much-needed lift today. Our next guest sees clearer skies for that space in the months ahead. He makes his case. He shares his plays. We do it after the break. We're live for...
Interesting. Okay, so let's see what's going on with Apple and this downgrade that came today. Oh, to finish out this PayPal article. So what do they have? About $85, $84 price. Admittedly, PayPal has significant exposure to some of the market's biggest risk factors right now, spanning macroeconomic weakness to industry-specific competition. Unlike its rivals, PayPal does not have an external moat, such as Google's Pay leverage of advertising, Apple Pay's leverage of its broader ecosystem of device installed base and other service sales, and Shop Pay's leverage of Shopify's ecosystem in merchant solution sales to latch onto. Other than the online payment processing, however, the company remains fundamentally sound with durable support for sustained cash flow growth. The business is also unlikely to face substantial displacement of longer-term growth opportunities. So, the way I could also kind of look at this is, in terms of Apple Pay's importance to Apple, like, sure, it's important, but where does that rank for Apple? Is it the 10th most important thing at the company, the 5th most important, the 20th most important, right? Certainly not the most important. For Google, where does Google Pay rank for the level of importance to Google? Well, it's certainly not number 1, number 2, number 3, number 4, number 5. Is it number 10? Is it the number 15 most important thing, right? And so this is all PayPal does. Like, this is their focus. PayPal, Venmo, Braintree, and everything they got going on there. So I don't know. I think they maybe don't get as much credit as maybe they should. But anyways, Apple, let's go ahead and take a peek here and see what happened. Oh, Apple's releasing an iOS 17 update to address overheating of iPhone 15s. Yeah, I heard something about that. Google launches Pixel 8 phones at $699.99. Wow. That's interesting. Oh, and a second version of Pixel Watch. If you told me I couldn't have an iPhone, I would actually get a Google Pixel. That would be my phone. I think they're pretty cool. And I'm sure the tech works great on them. The new phones have a 50 megapixel main sensor along with a better telephoto lens and selfie autofocus. Wow. Google is promising the best improvements to video performance, including low. Interesting. See, this is where Apple really locks you in the ecosystem. Because, I think that's cool, right? I like that Google phone there. And, but I was just kind of like mentally going through like, wow, could I get that phone and get rid of my iPhone? And just like Apple has all these little small things that make it like, would be hard to get rid of. Like, first thing I was thinking of, it was like AirDrop. Right? I airdrop stuff from my phone to my iPad to my computer, my phone to my iPad, my computer to my phone, like all that stuff all the time, right? Could I do that as easily with a Google? Or am I going to have to go through extra steps to just try to send this photo over to my Mac, right? Or something like that. Like, these are just like the small little annoying things that Apple has that they do very, very well. That makes it tough to get out of the ecosystem once you're in the ecosystem. I'll say it like that, okay? So let me go back here to sharing screen. Back to Apple. Let's see why Apple was downgraded here today. Wait, Apple CEO exec sells stock. What is this all about? From today. Several Apple executives, including CEO Tim Cook, are selling shares in their employer as scheduled. Okay, as scheduled. 62-year-old Cook filed to sell more than, what? 40? Could you imagine just being able to sell $41 million of Apple stock? Could you imagine that hitting your bank account? $41 million in your bank account. Like, oh my gosh. Whew. Crazy, right? Levels. Cook, who has been at the helm of Apple for more than a decade, still owns roughly 3.28 million shares of the company, according to Bloomberg. Catherine Adams, a senior vice president and general counsel, and Deidre O'Brien, senior vice president of retail, each filed to sell $11.3 million worth of Apple shares. Jeez. The sales come as Apple shares have declined more than 8% over the past month amid softer consumer sentiment outlook as interest rates remain high. Student loan repayments kick into effect after a 3-year moratorium. All right, separately on Wednesday, KeyBank downgraded Apple to sector weight from overweight, saying its valuation is stretched. Okay, maybe we can... No, I didn't want to do that. Go back. Maybe this one? There we go. There's what we need. Apple downgraded KeyBank on valuation potential slowdown U.S. sales. KeyBank downgraded Apple to sector weight from overweight, which essentially just means, they were kind of expecting the stock to do as good or bad as the sector does, to now they're expecting overweight would. So now they should expect the stock to potentially do, let's call it a little worse in the sector. I don't know why would. They're going to sector weight from overweight. Okay, so before they were expecting Apple to basically outperform whatever the sector does in general. So if the sector, let's say, is up 5%, they expected Apple to be up 7% or 10%, or if the sector was down 5%, they expected to do better than that, down maybe 3% or something like that, right? So now they're just expecting it to do however well the sector does is how well Apple will do, or bad. Noting a stretched valuation and expectations for U.S. sales to struggle. The analyst said that they downgraded the stock based on valuation as Apple is trading near an all-time high multiples and large premium to the NASDAQ compared to its history. Yes, as points I've made probably 100 times in the past 6 months. U.S. sales are likely to struggle based upon analysts' view of U.S. upgrade rates, and initial U.S. iPhone promotion from U.S. carriers are being restrictive. About 37% of the tech giant's revenue comes from the United States, making it the company's largest geographic segment. The analysts anticipate U.S. to see its fourth consecutive year-over-year decline in Q4 2023, potentially going into Q1 2024 for several reasons. In addition, international growth expectations for reacceleration could be aggressive, according to analysts. They added that estimates seem to be full from the top and bottom line perspectives. The analysts said they expect fiscal 2024 revenue growth of 3.5% versus consensus of 6% or greater, where they have a more subdued view on revenue across Apple's segments. They also anticipate margins to improve at a slower pace in the next couple of years. Okay, fair. I think that's pretty dang fair. I'm a little confused about how this iPhone's doing because it's a weird situation, folks. I mean, I don't know. I just haven't really seen almost anybody in the States that at least I speak to that's that excited about it. Maybe one person out of everybody. And so, I don't know. It just seemed like it's not going to be an iPhone that does very well. But yet on the flip side, we have a situation where supposedly we have the... I'm going to go to their website here. I'll pull this up for you guys. Where lead times are long, like Donkey Kong right now. So let's go to buy an iPhone. All right. So let's say we're going to buy this guy. And I don't know, whatever, black. Okay, 256. Let's say no trade-in. Okay, so basically for a new iPhone 15 Pro Max, it'd be $1,200, and it was supposed to be delivered October 26th through November 2nd. So let's call it, 3 to 4 weeks from now, roughly, supposedly. So I don't know, man. And that should be the best seller overall for the company. So I wonder if it's coming from overseas, if they're seeing like actual good demand. I wonder if it's coming from overseas. I also wonder, like, maybe they're not seeing that great a demand, but just like nowadays, a lot of people are signed up for these plans with Apple or others where essentially every time a new iPhone comes out, they upgrade to that iPhone, right? And they pay like a certain monthly fee to be part of that. I know Apple has that plan, I think it's, maybe $40 a month, $50 a month. And so every time a new iPhone comes out, you get the new iPhone. So I don't know if we're going to be able to gauge the true iPhone demand by the first month or two numbers like we used to be able to do back in the day. Because back in the day, you used to be able to look at what Apple was doing that first month or two and be able to gauge if this iPhone's a banger or not. Nowadays, just so many people are just in the automatic upgrade cycle that's going to be that whole first month or two. I don't think you're going to really understand true demand of the iPhone until you get into wintertime, to be honest, and certainly springtime. You'll understand how that iPhone actually did. But that first month, it just doesn't seem like it did back in the day because of all these other factors. And you got to think, like, every celebrity out there is always going to upgrade to the newest iPhone every single year, no matter what. So they're all going to be part of that initial demand, and they probably order 5 of those dang things or 10 of those dang things. Imagine the freaking Kardashians. That family alone probably orders 100 plus of the newest iPhones every single year because they need a whole bunch of them, right? So I don't know, man. Those are just kind of things I think about in terms of the upgrade cycle, and just like they're always going to be this crazy like demand for that first month or so. You'll find the real demand, I think, month 2, month 3, as you kind of run down and the phone's already been, available and whatnot. So we'll see what happens there. All right, let's see what this guy's talking about here on Send and Send.
I just think it's going to be hard for markets to do well between now and the end of the year. The level of interest rates, as you've been talking about so much, at the margin makes bonds more attractive than stocks. I mean, if you have about a 5% yield on the 10-year, and you're looking at all this uncertainty, whether it's in Washington or whether it's hard landing versus soft landing, it's not a bad place to be, at least temporarily. Mm-hmm. And then you have some fresh concern about whether we can really count on a soft landing with this level of interest rates and some other factors. And then you have the mess in Washington, and in particular, the likelihood of another shutdown. And anytime you don't have a Speaker of the House, which is a figure, a position which is cited directly in the Constitution, that's not a good thing. Yeah. And you have some fresh concern over the fiscal trajectory of the country, which I think is quite poor.
Yeah, so he just laid out, obviously, the full, let's call it bearish case or whatever we want to call it there. And that's a good point. On the flip side, though, what I could say is if you have massive amounts of uncertainties and there's so many things to be scared about in the market, that's usually a time to buy, right? The more uncertainty, the more things that people are like, oh, man, we got this to worry about. We got this to worry about. Oh, man, there's all this stuff going on, right? Usually it's a great opportunity to buy. So I think that's some food for thought as well. Like I haven't seen it ever in history where you didn't have a time period where there was massive uncertainty. Everybody was so concerned about a million things. And a year or two later, it wasn't like, you look back and like a year or two later was a situation where it was a lot better. Like you should have been buying during all that uncertainty. So I don't know, that's some food for thought as well. Because if everybody's already concerned about a million different things, then, some guy just ran through my yard, man, it's messed up. If there's already a million things to be concerned about, worried about, then the market knows it, right? The market knows it. So, I don't know. That's something I kind of think about. Alrighty, let's see here. What else we got going on? So, yeah, Tesla, wow, it's strengthening into the close. Look at this baby. Now we're pushing a 6% move on Tesla, Palantir is having a great day, 5.7%. Cake actually having a good day. Who would have ever thought Cake would have a good day? That stock never does good. Almost a 4% mover here today. Fubo starting to bounce back a little bit. I can't freaking wait for the earnings of Fubo this next 2 to 3 quarters, man. I cannot freaking wait. That's honestly the company I'm looking the most forward to seeing what happens in their earnings. Yeah, definitely it seems like we're strengthening into the close here, folks. No doubt about it today. Now, there's a lot of talk about the market maker wanted stocks to get, let's just call it into a green place today, tomorrow. I don't really have any opinion of that. What basically the kind of thought process is, a market maker doesn't like it if a week is too red or green for that matter, because you get into this like offside situation. Option premiums obviously are worth an immense amount of money, and so the market maker doesn't like that anyways. Not really my call in regards to that. And even Netflix turned green. Wow. And that one had been red almost the entire trading day for Netflix, right? Okay. Energy stocks sink as crude drops to 4-week lows. Energy, XLE, is by far the worst S&P sector performer in Wednesday's trading. Down, obviously, pressured by a pullback in crude oil prices to lowest level in 4 weeks. Crude oil fell early following news that Saudi Arabia, as expected, affirmed its plan, affirmed, shouldn't be confirmed, but whatever, its plan to extend production cuts of 1 million barrels per day through year end. Then losses accelerated after the U.S. government data showed smaller than expected weekly decline in domestic crude supplies and a much larger than expected 6.5 million barrel jump in gasoline inventories. Okay, so that's what happened there. Because I'm like, wait, there's got to be more to the story. That's all I think about all the time. There's got to be more to the story. And you got to dig deeper sometimes. And so they're talking about, like when I first read that headline at CNBC and it said, Saudi Arabia and Russia does cuts as planned, it's like, okay, so why is oil down 5%? It's got to be something else. And so, yeah, 6.5 million barrel jump in gasoline inventories is not going to be ideal, right? U.S. crude stocks fell by 2.2 million barrels and 414 million barrels in a week ending September 29th. But stocks at the Cushing, Oklahoma storage hub rose for the first time in 8 weeks, according to EIA. Fears over demand factors are creeping back into the marketplace. Interesting. Yeah, I heard something about 25-year lows in terms of gasoline demand recently. I heard something about that. Ooh, I would love to read a bearish take on oil. This should be interesting. The thing you got to understand about oil is, many times when you go into wintertime, it's not really a great time for oil prices. It's usually around the worst time for oil prices in wintertime, right? Because everybody kind of looks at summer travel season, driving like crazy and everything like that, and they kind of expect like summers to be the highs for overall gasoline demand at least, right? Which kind of makes sense logically. But you also do have this factor of EVs, right? And at the end of the day, more and more EVs that are in the market. And remember, this isn't just the United States. In Europe, they're adopting EVs heavily right now and are going to a much greater extent over the next several years. And China is adopting EVs probably faster than any country in the world. So whatever you think is going on in the United States for EVs and the EV revolution, just understand in China, it's like way bigger, okay? So at the end of the day, more and more EVs means less and less gasoline demand over time, which is certainly not a great thing for oil price over time, right? So just some food for thought there. Bearish City analysts see crude oil tumbling toward low 70s next year. Crude oil futures closed modestly higher Tuesday, a day after a 3-day session pulled prices to 3-week lows in the wake of rising treasury yields, around $1, blah, blah, blah. Higher interest rates make storing and shipping crude more expensive. True. Kind of. And the stronger dollar means crude is pricier for most buyers. Yes. If you're outside the United States, which could eventually hurt demand. OPEC Plus ministers will meet to review global markets on Wednesday, but the joint meeting is not expected to recommend any policy changes. OPEC Plus plan has been working as production cuts by Saudi Arabia and Russia have the intended effect of tightening the global oil balance and have convinced previously bearish speculators to turn bullish. Interesting. The Saudi appetite to withhold oil from the market supported by Russia, maintaining a certain level of export constraint, points to higher prices in the short term, all else equal, but $90 looks unsustainable given the faster supply growth. The City note noted, the note doesn't even sound that freaking bearish. It doesn't. That note didn't sound that bearish. I could have gone way more bearish than that. It's interesting. We gotta go back here. I want to see what's going on. Tilray, what is this all about?
Bell. Let's get back to Christina Partsinevelos now for a look at the stock she's watching. Christina.
Thank you, Scott. Tilray reporting larger than expected loss in Q1, with the CEO telling CNBC just this morning that, quote, it's frustrating when you look at our stock and you have all this great growth opportunity. We can see the shares are down about 16% year to date. The company has been expanding recently in medical marijuana as well as beer. It acquired 8 beer and beverage brands from Anheuser-Busch, and the stock is off its lows of the day, but like I said, still down 17%. Despite all those growth opportunities. Palantir shares popping on a Bloomberg report that the software firm is the top pick. The software firm has the top pick for a contract, and that would be the UK's National Health Service. The report said the deal is worth $550 million and should be announced later this month. I reached out to Palantir to try to get an answer. They didn't respond back in time. Shares are up almost 6%. Scott.
Yeah, what a difference a day makes. Because, those shares, along with many others, yesterday, not
Just
a great
yesterday,
day as the NASDAQ got crushed.
because of the yields.
Yeah. Thank you,
Thanks.
Christina Partsinevelos. Last chance now to weigh in on our question of the day. We asked, would you buy Apple on today's downgrade? Head to @CNBC Closing Bell on X. The results just after the break. But first, a quick message as CNBC celebrates Hispanic heritage.
All right, so that is phenomenal news in regards to good old Palantir. Let's go ahead and check it out more in depth here. Palantir set to win. UK NHS contract amid data privacy concerns. Oh, f them. Oh, you kidding me? Are you freaking kidding me? You'll be flipping my flapjacks. Peter Thiel's Palantir Technologies, way to put it, dick. Unbelievable. Unbelievable. Peter Thiel's, no one can calls it Peter Thiel's Palantir in the year freaking 2023. If you want to put anything, put Alex Karp. Like, it's just ridiculous. Preposterous. Insane. Silly. Palantir Technologies is on track to win a contract to overhaul the UK's National Health Service, even as concerns remain over data privacy, Bloomberg reported. Palantir appears set to be named the winning bidder for a 5-year contract, which may be extended by as long as 2 years, and is worth as much as 480 million euros, or about $579 million, Bloomberg said, citing people familiar with the matter. The data analytics company will help the agency analyze medical data, detect patterns, and overhaul the entire system. Yeah, it's a fucking mess. Okay, it's a lot of freaking work for $600 million, okay? The deal is subject to final approvals. Palantir has contracts around the world with government intelligence agencies and military forces around the world. Civil rights and patient advocacy groups have expressed concerns over the transparency of the health data. Addressing apprehensions, the NHS chief data officer said in August that the software vendor would, quote, never hold or have access to NHS data for any purpose other than as directed by the agency. Patients will have a say in how their information is used. 100%. What the fuck is Palantir going to use with the fucking data, man? They don't give a crap about that. Palantir wants to make a bunch of money from the agencies. They want to make a bunch of money from the government and from commercial companies. It's not freaking Meta or Google or Amazon or any of these other companies that, might want data to throw you ads and like, oh, they searched this term. Let's throw them an ad for this now. Oh, they're looking at hotels in Cabo. Let's freaking send them Cabo ads now. Like, no, okay. Palantir doesn't give a crap about any of that. It's almost laughable. I understand they got to always look out for this data stuff, and I understand in Europe in general, they're much crazier about the data than we are. But, anyways, just silliness. But freaking phenomenal news in regards to Palantir. Woo! That's big, man. That's big. I mean, we're talking about Palantir. We're not talking about a company that's doing, $10 billion of revenue, $100 billion of revenue. Palantir's a little guy, okay? So when we talk about a $600 million contract over several years, it's a big deal. That's a big deal, folks, okay? I mean, if we look, annual revenue, $2.2 billion expected this year. Yeah, it's kind of a big deal, to say the least. They just showed Costco. What's going on with Costco here?
Coming up, Energy stocks slammed as crude oil pulling back to its lowest level in nearly a month. Plus, the latest check on the health of the consumer when Costco reports its September sales in OT. That and much more when we take you into MZ.
That's interesting. You know, Costco's due to fall, man. Costco's due to, like, this stock's near an all-time high, and I just feel like in this market, you know, obviously Costco's one of the best companies in the world, but I feel like something's got to give at Costco eventually. And I have seen some real weakness in their U.S. numbers here recently, folks. The U.S. numbers have showed some real weakness here recently. You look at their latest earnings report, but something's got to give with Costco, man. I mean, this stock's freaking at basically an all-time high. Like, come on. You kidding me? And honestly, to be honest, I want Costco lower because I would love to start a position in Costco. I'm just not going to start a position in Costco at freaking 36 times this coming year's numbers. I'm just not. Costco isn't going to have that sort of growth to really justify that, in my personal opinion. If it's 26, it's a different situation. If it's 22, it's a whole different situation. 36, this coming year's numbers, it's too dang rich, man. It's too freaking rich. So I love Costco. I would love to start a nice size position in Costco, but damn it, give me a reasonable price on the stock. I don't need to get it at, I don't need to get it at 15 times like I'm getting Target right now. That'd be awesome, but I'm not that, how could we say it, greedy, where I'm like, give me Costco 15 times like Target. I would gladly take it. It's just like, I don't need it down there. Just give me a 22, give me a 24, give me a 26 multiple times, this coming year's numbers. I would love that. And then we can make something happen there. But, yeah, pricing just a little rich. It's a little rich in terms of the valuation, okay? What's coming? Why are we all of a sudden testing all our phones for emergency services? What's going on here?
100. What do you make of it?
We're stepping into it pretty tentatively and just sort of one eye, if not both eyes, on the bond market. Usually, bonds are going to do what they're going to do by 3 p.m. Eastern time. You get the Treasury futures trading on the floor. It kind of ends around there. It felt as if it was safe to say, fine, we have this, a little bit of a bid in Treasuries, and that was enough to get this oversold market moving a little bit. It is still the mega caps. We've lost 300 S&P points in about 3 weeks from high to low, and we regained about 34 of them. So obviously it's baby steps. We stopped just short so far of that 200-day average. So maybe we've tested the technical scenario a little bit. Now it's all about what the economic narrative is going to be. Also, a net positive that the bond market did respond to slightly softer economic numbers. It showed you that it wasn't just about yields blitzing higher based on fear and self-reinforcing supply concerns.
So you said it. I mean, it's too soon to declare that it's anything other than a short-lived reprieve. Yeah. And to your other point, it's largely going to depend on what bond yields do. We have a jobs report, right, on Friday, and then the bond market's closed on Monday, too. So you have some for Columbus Day.
Exactly.
Got a lot of interesting things coming up that could drag this market around.
Without a doubt, and it's a little bit of a delicate fundamental situation because you want to see enough softening in the economy that the bond market can find some kind of real buying in there and have a reversal in that upside in yields, or at least get the stock market used to the idea that it's not going to fly higher from here, while also, of course, you don't want to pull forward the real slowdown and the real recession concerns. So we will see, but it's pretty well scripted here.
You know what I wonder? I'm like, who decides what's a holiday and what's not? They just mentioned about Monday the bond market's closed for Columbus Day, and just like, do they have to vote on that? Is that like something that goes through the politicians have to vote for? Okay, this is a actual holiday versus this is a celebrated holiday versus this one is a national holiday, and all workers need to get this day off. Like, who decides that, man? I do wonder. Ooh, are they talking about oil here?
Commitment to those production cuts through the end of the year. So perhaps some signals there that they don't see the global economy on all that strong of a footing. But it also feels like some of the headwinds that the oil market had largely been ignoring on that relentless climb higher are now finally starting to catch up. That's, of course, the higher dollar, as well as what higher for longer rates might ultimately mean for oil demand. And we are starting to see some cracks in gasoline demand specifically. The gasoline crack spread has all but collapsed, really falling off a cliff, with RBOB futures down another 7% or so today. We got the latest data from the EIA today that showed that demand was down 8% over the last month compared to last year. And then finally, we saw so much interest in this trade, money flowing into the sector over the past few months, and bullish bets outnumbered bearish bets 6-1. And so
that made me laugh. Jerome throws a dart on what's a holiday and what's not. That's pretty funny.
Today, perhaps not all that.
By the way, I need to figure out how to keep your guys like messages in the chat up for longer, because it seems like they're only up there for like, I don't know, 10 or 20 seconds and they go away. I need to find a way to like keep them up there for at least like a minute or two, some longer.
Spoke yesterday about the destruction court in some.
I'll figure it out in settings. Freaking Walgreens. Do you ever go up? No, you only go down.
What do we think?
Yeah, so Costco is the lone retailer still reporting these monthly comparable sales like we're going to get here today. And last week it reported another really solid quarter, though it
Costco's going to be reporting them until they start going bad, and then they'll stop reporting them. That's how it always works.
Be surprised if sales are down slightly from last year when we're just looking at the month of September. Placer.ai store traffic data for Costco shows that store traffic fell each of the first 3 weeks of September compared to those same weeks last year. Gasoline may begin to act a little bit more like a tailwind than a headwind for Costco. We'll see how that impacts the numbers. And just like you said, Scott, I've been saying consumers are kind of
Tesla just cracked 6%. Oh yeah, baby.
spending gets pulled in more sharply, but Costco members skew a little higher income, but still like the deal, particularly on essentials. So it's a really interesting retailer to watch here. Shares are up about 5% over the last month. The XRT fell 8%. Consumer discretionary and consumer staples ETFs fell 5%. And that.
Let's take a peek at Monster's valuation versus Celsius here. Let's take a peek. So, but Monster's a good example, like Elf, where it was a company I was invested in. It made me a lot of money. I sold out of it because I thought, like, the growth can't really get that much better from here. Like, they've got it kind of maxed out. The company did nothing but perform tremendous over time and do much better than even I had anticipated, right? And so I ended up selling out all my shares and took my profits and moved on, right? But I honestly should have never taken any of my profits. I should have just let that baby run for, still to today. I should still hold Monster shares, right? But at the end of the day, great companies, truly great companies, will find ways to continue to innovate, continue to push their businesses forward, and make for great numbers year in and year out. And that's just what I found time and time again. And every time I try to, doubt some of these companies I hold, I just, end up stepping back later on and being like, why did I even doubt it? Like, they kept performing amazing. Like, why would they stop performing amazing? Like, they got an amazing management team there. They know what they're freaking doing. If I'm super bullish on a stock, which I'm not going to buy stock unless I'm very bullish on it, right? I'm very bullish on it. And the management team does a lot better than even I anticipated, right? And I expected. Well, damn, they probably got something going on there, right? Versus a management team that, let's say, they continually disappoint. It's just like you look at the numbers, you're like, damn, man, like, what the hell's going on? At the end of the day, if you're with a team that consistently disappoints 2-3 quarters, that's usually time to cut it and be like, okay, I think I was wrong about this one. Let's move on and take a small loss versus a massive loss, right? But when it comes to great companies, man, these Elves, these Monsters, these Costco's even, right? Every time you think, like, this has to be the top, like, they can't keep this growth going, there's no way, they just do it. And regardless of the economic environment, recessions, inflation, no inflation, pandemics, whatever, great companies with great management teams find a way to get the job done. And so I think Monster is just a phenomenal example of one of those sorts of companies. And hats off to them. Hats off to them. So, but anyways, I might take a peek at them versus Celsius in just a moment. I want to run back here and see if they're speaking about anything interesting.
Short term, today we were able to feed off that in very modest fashion for a little bit of a relief rally.
So the fact that, to your point, the fact that we saw yields take a
All right.
For example, if you look at stocks, most oversold since last October, with RSI down 28.
All of it feeding in, and in fact, bonds are perhaps even more oversold, therefore buying.
Yeah, I'm going to pull something up for you guys. Then we'll come back to the whole monster Celsius. So, wow. Today we're at a 19? So yesterday we actually hit a 17 for extreme fear. Interesting. So the S&P and its 125-day moving average is in fear state. Stock price strength, net new 52-week highs and lows in the New York Stock Exchange is in extreme fear right now. Interesting. Stock price breadth is extreme fear. The market is made up of thousands of stocks, and on a given day, investors are actively buying and selling them. This measure looks at the amount or volume on shares in the New York Stock Exchange that are rising compared to the number of shares that are falling. A low or even negative number is a bearish sign. The Fear Greed Index uses decreasing trading volume as a signal for fear. I don't know how much I agree with that. Decreasing trading volume as a signal for fear. I don't know how much I agree with that, guys, because at the end of the day, think about a super fearful market. You're going to see a massive epic spike up in terms of how many shares are trading, right? Might be a good time to learn how to hedge your portfolios and, consider doing some of these sorts of things. And, I talk about that in, video after video during the summertime, and, everybody was focused on buying calls instead of puts, right? And that was just a phenomenal time, July, August. To go ahead and add some puts to your portfolio, add some hedges, just in case. It doesn't have to be some crazy big positions, just a little bit. 1% of the portfolio, 2%, 3%, something like that, for the next 12 to 18 months, just in case. And, now people are trying to add puts. And I'm not saying it's a bad idea. I'm just saying, it's not nearly as attractive of a time to add puts today than it was a month ago, 2 months ago, 3 months ago. That's just bottom line in regards to that, right? So, anyways, folks, appreciate you joining me today. This is kind of like the first real official, I would call it, live stream where I've actually kind of let the folks in the private stock group know that I'm doing this over here, and I'll slowly start to let other folks know about it over, as the weeks go on and whatnot. But I appreciate you guys joining me. And yeah, time for me to get to work on a little main channel video for the day. I got a lot of interesting stuff to talk about for the main channel here today. Have a great day. Peace.